The fallout from Zimbabwe's freeze on bank lending has begun, with sugar producer Tongaat Hewlett suspending advance payments for cane deliveries. The South African firm's Zimbabwean subsidiaries say the decision follows the government's lending ban. In a statement addressed to farmers, the company says it funds the advances from bank loans, which have now been suspended. Tongaat Hewlett has made advance payments to farmers to help them with their cash flow. Zimbabwe ordered the suspension on Saturday, saying the move was temporary and meant to stop speculation against the national currency. Joining us to explain this and how it will impact the economy and ordinary people are Analyst Rufaro Zengeni and Chief Executive Officer of the Zimbabwean National Chamber of Commerce, Christopher Mugaga. Very good evening, Rufaro. To begin with you, unwarranted and sustained depreciation of local currency to arrest an upward inflation spiral is the reason that has been given for this mandate imposed by the central bank. What is the situation on the ground at the moment?
Well, on the ground, inflation is definitely an issue. The official number for April is 15.5%, and the official auction rate is 170. But on the parallel market, we hear trades happening at around 400. About 30 days ago, it was as low as 220, 250. So there certainly has been a significant deterioration in the value of the local currency, and this is definitely what's driving this policy action we've seen from the government.
So one of the things that we've seen, certainly in response to this policy by government, is that reaction certainly from Tongaat Hewlett. What other companies or industries will be impacted, and how so?
Okay, so there's been an announcement by the Reserve Bank that they will allow the banks to lend to marketable commodities, to anybody funding marketable commodities. So the Tongaat Hewlett story that you just made reference to, they fund cane purchases. I think their banks will now be allowed to lend the money. I think one of the problems with this policy announcement was that all the effects on the various sectors of the economy were not well considered, and there's been some engagement and feedback from the market, and so it's already been rolled back for certain for marketable commodities like sugar and cane.
Now, those other businesses that aren't covered by this change in mandate, if you will, how do they fund their operations? Are we likely to see a parallel borrowing market?
Well, that's what happens everywhere else in the world when there's demand for good or service and it's banned. That's how black or parallel markets emerge. So certainly if this ban is sustained for longer than just a few days or a couple of weeks, we're going to obviously see the emergence of parallel markets for lending. The government did state that this was a temporary measure, and I think that in the past, when they've been quite hasty with aggressive policy actions of this nature, and there's been significant pushback from the market, they have made adjustments, and I suspect very much that we will see them continue making adjustments. They've already, within a few days of this policy announcement, changed the rules regarding lending pursuant to marketable commodity, and this will be the last change. I think we're going to see many more changes.
Well, this sudden change, if you will, almost suggests that there was limited to no consultation with business. Is this a correct way of looking at it?
I think that's a fair assessment. Certainly, there was no consultation, there was no engagement with the market in terms of what would be the best policy action to arrest this high inflation. They basically ambushed the market with these announcements, and this is why there's such feedback after the announcement.
Well, both the central bank governor and the Minister of Finance have said this is a short-term measure, but we know that the problem is long-term. What is a long-term solution to all of this?
Well, look, the underlying problem in Zimbabwe at the moment, from a macroeconomic standpoint, is money supply growth, fiscal indiscipline, which manifests in running budget deficits and significant money supply printing. This is what is driving inflation, and this is what is driving the devaluation of the local currency. So until that issue is resolved, we foresee high inflation, and that's not going to change. So a lot of these policy actions that claim that there are other reasons driving inflation, in my view, they're performative and they're not going to produce the desired outcome.
Now, the mantra by which Zimbabwe has been going for the last few years is Zimbabwe is open for business, which would suggest, which is an open invitation certainly to foreign direct investors. What does this do to foreign direct investment when such policies are made?
So unfortunately, when the current government came into power in 2017, there was a lot of euphoria around their policy towards foreign investors. This mantra of being open for business was, the business community loved it. But there's been a huge disconnect between the mantra and the policy action on the ground. So, and one of the problems is constantly chopping and changing policy, and certainly abruptly freezing lending is not great for business. So, we unfortunately have this long, well-documented history of economic policy action that is the antithesis of being open for business.
So what currently would you say is driving Zimbabwe's economy?
So Zimbabwe is basically the biggest sector, contrary to the perception out there that we are a natural resource economy driven mainly by mining and agriculture. Actually, the biggest contributor to GDP is retail and services. That's the biggest part of our economy, and unfortunately, because of the perception of our country, we over the last 18 months, foreign direct investment has not been manifesting. If anything, we've seen an outflow from foreign investors, and I don't think this is going to change at all as long as we maintain the current exchange control regime and policy framework.
Rufaro, thank you. We're delighted that Christopher Mugaga, CEO of the Zimbabwe National Chamber of Commerce, has been able to finally connect. Chris, thanks so much for speaking to us. The question for you really is around this recent measure by government, and what is its impact on business? Now, you represent the Chamber of Commerce, and with it a number of businesses in Zimbabwe.
Yeah, thank you for having me. Good evening to your viewers as well. Quite very unfortunate, definitely, that the stance was taken, but obviously we are in touch with the government of Zimbabwe as private sector, trying to look at the best means on going forward regarding the very policy measure which government has taken, especially on the freezing of lending by any bank within the country. I think you appreciate that amongst the coterie of measures which was taken by the government of Zimbabwe last Saturday when the president of Zimbabwe announced the measures was definitely on the suspension of lending by banks in Zimbabwe, in addition to a host of other factors or other measures which were taken. But definitely, I think if you ask to tell you that we are certainly against the measures which government has taken, especially knowing very well the role of credit, not only to private sector, but even to confidence within the economy. And we are looking at ways to reverse that, but through engagement. We are appreciating that we have quite a number of our players within the private sector also who had been somehow abusing the or credit lines they were getting from the banking sector and playing with the credit they were getting to trade in black market forex, we can say.
Now, Chris, finally, one of the measures, obviously, in fact, one of the reasons that organizations borrow is because they'd like to fund certain operational activities. Salaries could be a factor. Do you see this impacting certainly civilians at the end of the month because their employers are unable to pay them salaries?
Yeah, I mean, look, obviously, we are not certainly going to just look at it from a salaries level, but it's a fact that the whole working capital requirements trying to cover up for the gap is one of the major reasons why you saw most companies making a beeline to the banking sector to somehow draw down or borrow. But listen, when you look at the direction of any economy worldwide, if you look at the portion of credit, especially to private sector, you can use that variable to measure the direction an economy is taking. And once you stop lending to private sector, definitely then the question will be how and why. Because the economy definitely, when you see such a freeze, you should then know that we are not moving in the right direction. Then look at the issue, access to credit is a pillar to ease of doing business. I think you know, if you talk of the ease of doing business for any economy, besides other variables like how to register property, how long does it take and all this, just the access to credit is also one of the major variables to measuring ease of doing business. And once you freeze credit or access to credit by corporates, you are just closing off the economy to any player who might be interested in that jurisdiction.
Thanks for that, Chris. Rufaro, I'm going to close with you. We've talked about the impact that this has had on business in Zimbabwe, but what we haven't talked about is the impact of this on banks themselves, because one of the fundamental reasons they exist is to lend money. Now, if they cannot lend, how do they survive?
Absolutely. This is an existential issue for the banks. Net interest income is a material part of how they keep their lights on, and a sustained ban on net lending basically puts the entire banking sector into peril. So that's one of the major reasons as well why this was firstly a bad idea, because banking and finance is, this is where money changes hands. It's the lifeblood of any economy, and if you destroy your banking and finance sector, I think it's fair to say that you're destroying your economy.
Rufaro Zengeni, financial analyst, Christopher Mugaga, CEO of the Zimbabwe National Chamber of Commerce. Gentlemen, thank you for your time, and they were unpacking that conversation for us around lending, Zimbabwe's lending ban, which currently exists at the moment. Now, as we